Well, good day, everyone. It will today be the eighth down day for the major averages, eighth down day in a row. It's looking that way. There's definitely a weight on these markets that have been telegraphing either and or that not all is well in QE land with these central banks and the global economies. Or it could also be a combination of that together with the anticipation of a rate hike in December when the Fed meets. Indeed, the Fed futures have bumped higher to 72%, and that's pretty good odds for a rate hike in December. So, obviously the markets are forward-looking, and we could continue to see some sort of a continued correction here in the meantime. And of course, elections are this Tuesday, so that'll also be quite interesting to see what happens. Since in the polls, they're almost neck and neck now, whereas a month ago it seemed pretty much a lock for the Clinton party. So yeah, it's been a never-ending entertainment circus of sorts to see these candidates go head-to-head. And again, when it comes to politics, we don't use politics or anything like that in our trading. That's just noise. But what we do use is the price volume action, as you all know, of leading stocks and the major averages. And not surprisingly, the number of names on our focus list has shrunk to basically 7 names. I think Facebook might have to come off. Certainly that PAYC has to come off. So we went from a full list down to just several names now, and that's very typical of downtrends. In fact, in terms of trading your own account, when you let your stocks tell you what to do, you should be out of the markets as they all hit your stops, one after another. At least that's always been my experience, especially in the 90s, where you don't know how bad a correction is going to get, but you're already back in cash by the time the real correction begins because your stocks have already told you to get out. And maybe you have one position, maybe I would have one position that seemed to buck the trend, so I will hold on to that, because if it's bucking the trend and the weight of the market comes off, then that stock might leap to new highs. So there's a nice dynamic process in terms of managing your own portfolio when it comes to trading markets and negotiating the little twists and turns that the markets throw at you. Right now we're seeing gold, the precious metals, that looked quite anemic for about 3 weeks, but they've jumped. Here GLD, and then the miners, GDX, and silver, SLV, they're all jumping to the upside. I think it's possibly telegraphing here that while the Fed's is likely to hike in December, that doesn't mean that all is well, and I think that you have a lot of issues under the hood of this market. I mean, you just see it plain as day when it comes to the major averages, which scrape along new highs versus leading stocks, which you might get a small window of opportunity, like we did with Twilio and Acacia and some other names, and Nvidia. But you have to be quick to take your profits, because once the market turns back down, as we've seen, these names get slaughtered, and that's been the case for the last few years. That's the rhythm of the market. So taking profits when you have them in context with the chart obviously has been a great strategy, and keeping your stops tight as always. I mean, I think that's just a constant, really, when it comes to trading markets. So that's just a little note from Gil. He is going to be back in 2 minutes. So anyway, if we look at the general the commodities and the price of hard assets and such, I believe that if we can assume that central banks don't really have a choice but to keep printing, and I know that the Bank of England today talked about how they will not be hiking for the rest of the year, or not hiking, rather they will not be easing for the rest of the year because their economy is showing signs of life. which is good, obviously. And Brexit ultimately is good for the UK because it affords them more economic freedoms away from the burdensome EU. And the market has been, the stocks have been telegraphing that in the UK. So that is all good and well, but that is a small little slice of the big picture. Unfortunately, the big picture says that the global economy is not well, and central banks, unfortunately, I think, realize that. So, but they can't go more negative in the case of Germany and Japan, because that's not working. So I think they're out of ammo. They're out of bullets here in terms of solutions. And my guess is, and I'm going to put out a piece within the next week or so, at the right time, that is, on the history of Fed hikes that were done prematurely, which resulted in market crashes. And in prior history, it often was the first or the second rate hike that undid everything. This December, it's looking likely that the Fed will hike, and so that will be the second rate hike. Now, that could be the nail in the coffin. We'll have to see. And rest assured, though, if they do hike, markets don't just all of a sudden gap down. When you have these crashes like in 1929 or the year 2000, March 2000, where that was the market top after a couple of rate hikes, the markets don't just gap down. They give you warning signs. At least historically speaking, that's always been the case. Of course, maybe this time's different, but I do like the fact that markets generally give you an out. They do give you an exit point to either go to cash or go short. In the case of the VIX volatility model, that is waiting with great anticipation for the possibility of enhanced volatility as a result of many factors. So at any rate, why don't we go into talking about some stocks now. Gil?
Yeah, I just want to cover where the market's at. Basically, we're down, looking at another day down, 8th day down. I think we undercut. Did we undercut this September 12th low yesterday? I know we're doing it today. I don't know if this creates a potential for an undercut and rally, but the one thing you're noticing about this market is that leading stocks are just falling apart and dropping like flies one after the other. But this is not like you couldn't see this coming, because I think I talked about watching for this theme or discussing a theme that would tell you the market's getting weaker by watching how the leaders act and starting to see an expanding number of them break down. Okay, so you see Apple has been helping the market out over the past, say, month and a half, and now it's come out of this big, you got this big structure on the weekly chart, which is somewhat pod-like. Okay, and let's face it, what was our earnings growth in the last quarter for these turkeys?
We were minus 15%.
Yeah, so it's negative 15%. I think
over the last 3 quarters, actually, they've been down, and
so
sales have been down
as
well.
13 times for a company that's not even growing earnings. And you've said many times, Dr. K, that they don't have anything up their sleeves in terms of new.
There's no killer app.
Yeah, no killer app. So what we have here is the first sign of a failure. So with this sort of pattern, it's like a big double bottom. Right here is where IBD figured out that you can have bottom bases or bear bases. I don't know what the hell they were calling it, but somehow they're trying to come up with a new kind of breakout, and it worked briefly. You get a few percent on the upside, and then it fails here after earnings on the gap down through the 20-day line. So that's actually a place where you can test the short side. And what happens then is it just sort of runs into the 20-day line a couple days, and then we blast through the 50-day line on Tuesday of this past week on heavy volume. So now this thing is shortable, and any rallies up into the 50-day line at 112.50. Okay, so that's the one that's broken down. Google, another one that tried to break out last week here and failed, and it's broken down below the 50-day moving average. Now you'll notice something here, that you're undercutting this low here, which sets up this little undercut and rally move. But my guess is if it rallies up to the 50-day, I'd be looking to short it and looking for it to head at least maybe to the 200-day line. Maybe not as far as my arrow goes, but that's another big stock NASDAQ name that looked good a couple, 3 weeks ago, and now it's failing. So these become your short sale targets right off the bat, and I think I covered that whole concept a while ago. So, you know, if you saw it and you are a short seller and you're savvy enough, you've read all the books and done it a few times yourself, you would pick that up very quickly. I know I have. And I've been able to add about 10% to my year-to-date performance over the last 3 to 4 days, which is pretty good considering I don't play with really large positions anymore. It's just too volatile and too dangerous at times. So I have had to scale that down. Instead of just like blasting 100% position short in something, I'll go in 20, 25 and then try to work it up to 30, 35 if I can, as I'm campaigning the stock. But you know, the numbers in that case are not going to allow you to make huge triple-digit gains. I think you can make decent double-digit gains because that's what I'm doing so far this year. But it's pretty hard, and you have to keep things measured because of the volatility. You know, and you guys have seen how many times this market just randomly gaps to the upside. You know, and you see the market really weak one day, and then the next day you come in the morning, and you see the futures gapping up, you know, 28 on the NASDAQ or something ridiculous like that. So you get these kind of random gap up moves. So, you know, we're undercutting this low. Does it set up the potential for an undercut and rally? I think the best way to handle this from a short seller's perspective is simply go with the action that you're seeing in individual stocks, you know. So, because the bottom line is S&P, which is broader, I believe. No, how many stocks in the NASDAQ composite, Dr. K? Like 1,000? Anybody know?
It's quite a few.
Yeah, so the
Not off the
S&P,
top of my
it's
head,
one of
I'm
the
not.
S&P 500, but that thing's been in a downtrend since the latter part of August, you know. So I don't know when somebody's trying to tell you that the uptrend is under pressure, I don't know what drugs they're on because there is no uptrend. And if this is an uptrend under pressure, there is no uptrend. It's a sideways consolidation. So, but I guess when you have to sell newspapers, telling everybody you're in an uptrend, I guess keeps them interested. But
Yeah, there's over 3,000. It says here there's over 3,000 companies in the Nasdaq composite.
okay, yeah, so that's pretty broad. But we know it's been the NDX that has been leading the market, and now, you know, because it made a new high, and of course that was the peak. The narrow little breakout to new highs is your peak for the NDX right there, and that was the peak of the market. So you had this narrowing of breadth into these big stock NASDAQ names. Now they're all blowing up, and the rest of the market, which had already started to blow up a while ago, for those of you who were watching names like Twilio and Acacia and Impinj and Line and whatever other hot IPOs have been out there, those things just have come apart after late stage, for an IPO, I would say late stage failed bases on all of these names. So from Acacia to Twilio and everything in between. So, you know, that's what we've been seeing. And so you had a lot of advance notice that this was coming down the pipe, you know. So anyways, we can look at Amazon. This was a short on Tuesday. You got the gap down through the 50-day line is a late stage failure. Then you rally back up to the 50-day line. That's a nice short sale point. I think I told you guys to watch for this last week, and that would have been a short sale point. Boom, you're making money. Now you're heading for these lows. I guess you'll undercut these lows and maybe have another rally back up to the 50-day. The essence of a late stage failed base formation is that the first sign is always, and I've talked about this many times before, the first sign is always the breakdown through the 20-day line. So you saw that with Apple, Google as well, actually, if you study that daily chart. And same case here with Amazon. So you look at Alibaba too, which I'll get to. But anyways, this is trying to find some support along the lows here. I just put out a little tiny bit on the 620. Let's take a look at that. But I'll do it in small pieces, like just building up a couple hundred shares on the way up, because you're reaching what I call a potential terminus point. You've been coming higher, higher, higher. Now the MACD line is flattening out as the thing goes higher. You're seeing volume starting to peter out, so it's either going to consolidate tightly or it's going to roll over. So I'll come after it on the short side here. Now I covered yesterday in the after hours when it dropped down to like 758. I think that's where I got filled. When it gapped down or broke down in the after hours as a result of Facebook missing on revenues. And here's Facebook. This could be considered a shortable gap down, but here's a late stage failure. What was your first sign? Well, it broke through the 20-day line 3 days ago on Tuesday. And today it's gapped down after earnings. It's undercutting these lows, so it's probably picking up some buying from there. And right now you have a 123.48, or I'm sorry, 123.28 high, intraday high. So that if it rallied up closer, that's where you'd be looking to put a short out possibly and see if it breaks down. But as we can see, Facebook's had a long run, you know, so a nice correction here, even a top is not out of the question. Of course, everybody loves Facebook, right? So anyways, let's go to some stuff that I'm actually hitting or have been hitting on the short side. Here's Electronic Arts. You had a late stage failure here, so you just bust through the 50-day line. Notice how it was already showing weakness as it couldn't really hold the 20-day line here, a couple of closes above, and it tends to be a little bit volatile, 2-point moves in either direction. And then you bust, now you rally back up to the line, the 20-day line, you don't even get up as high as a 50-day line, although I think it did get that high in the after hours after they announced earnings on Tuesday after the close. I believe that was when they did it. And that was a short sale point. So that broke. So now we move up again today. Take-Two came out with a strong earnings report, allegedly, although they guided lower. That's gapping out. I would not use that as a viable gap up. In fact, I treat it as a shortable gap up, and I'm short the stock, and I'm up a little bit on it right now. We'll see how this pans out. Same thing with the way I treated Electronic Arts. Now, I did try to do the same thing with Gigamon, and I got stopped out very quickly here on the 620 because we never really got a breakdown in here. But remember how later in the day I thought it was shortable up around 56, 55 because I figured it would come in at least, and it did up there. So the initial short on the gap up was a quick stop out, and then you come after it later in the day, and I talked about this exactly 4 days ago right here, and that I was looking for it to roll over. So it has, but it's holding the 20-day line. So far it's not showing any signs of a late stage breakdown, but I would keep this one on my list and just keep an eye on it because it could bust a 20-day and then become a late stage failed base. It's had a pretty decent run coming out of this initial base here. Actually, it's had a hell of a run coming out. So it could be ready for a nice correction, a shortable correction. So another one, Adobe got an upgrade today with a $107 price target, so they take the stock up to about 108. And I actually shorted it near the 10-day line. This is another one I'm short. It's down a little bit. It's coming in a little bit. We'll see what happens. You can see the Take-Two is coming in now. 48.15 on the bid. Amazon also rolling in. So I put out a little bit there. I might put out some more if I get a 620, a clean 620 sell signal. Another one is Qualcomm, which opened up this morning around above the 10-day, around 68.50, I think it was, after announcing earnings. Nothing special about the earnings report. This is what the weekly chart looks like. So I see a pod-like formation, and really it's only come up halfway. There's a lot of overhead resistance on the left side of the pattern. So this is a good spot after a nice run off the lows. This is a good spot for a failure. So here we go. We dipped below the 20-day yesterday. You get a nice gap up on earnings that is shortable. And it's reversed. So I'm actually short that now. We're down 43 cents, bidding 66.66. That is the sign of the Uber devil, I guess, 4 sixes. Anyways, somebody's asking me to talk about what? NVIDIA? You shorted NVIDIA. When? And GoDaddy missed the max D stretches and covered. Well, NVIDIA, I think, announces what next week. GoDaddy was perfect, actually, if you hit it right around the 50-day line. So I don't know what it is you missed. Let me take a look at these. MACD stretch. This thing's pretty thin. I mean, there's never any real... There's a MACD stretch way before the open, or yesterday after the close, it looks like. And there's been no real MACD stretch here. You had a sell signal up here just after the close around... I'm sorry, just after the open at around 34.60, say. Right in here. Probably could have got in at 34.40. It's heading lower. So I don't really see where you got crossed up on that, to tell you the truth. GoDaddy, I'm sorry, NVIDIA, it's another one here.
They report, NVIDIA reports November 9th.
Yeah, so here's a cross right here, but you see how you're way below. When that crosses, you're already way below. You would have been better off trying to hit it on the MACD cross if you thought it was going to roll over. Now you're rallying back above. This may present another entry point because the 6 period line has not crossed above the 20 period line. So anyways, let's see. Qualcomm keeps coming in. That's working. Adobe trying to bounce back up. Take Two hanging around 48 just above. Electronic Arts up a buck. Activision announces after the close, so today, and that's what that looks like. So that's another failure. I would watch this. The way I look at this is if it's starting to fail and you get a gap up move on earnings, I might look to short it on the 620 chart. So anyways, I'm not sure what you missed on these. I think you weren't, I don't really see any MACD stretches on, I don't know why I'm putting workday up. I mean, that if you shorted this up here early in the day, then you got this break and a MACD switch you could have covered. But if you're short up here, I don't know that it's necessarily going to turn right around. It may just be bouncing. Notice the volume isn't too heavy and it could roll over again. So anyways, any other questions about stuff like that? Okay. So my bottom line here is that I'm short this market, or I'm campaigning the market on the short side, which means I can cover things at the end of the day and then come back and short, hopefully on bounces. So like, for example, I've been working Amazon since Tuesday, where I was able to hit it pretty hard at the 50-day line and then cover near the lows on the 620 chart and then re-short it again yesterday and it broke down again, and then cover after hours when it was trading down below 760, and now we're back up 77449 right now, and I'm putting it out again as a short, mainly because you're into this low here, so that these two lows here might present some overhead on the near term. But if we look at looking at the MACD, you see how you're starting to get the cross here on the 620. So it looks like it may be starting to roll. I mean, I think this stock's under distribution, as are many other names in this market. So it's really a matter of sticking on the short side, sticking with the short side and figuring out where to re-enter. And also, as I pointed out in terms of my own style, I'll be in and out of these things as I'm campaigning them on the downside. So short, cover at the close, rallies into the close. The next morning I can short again above where I covered. It breaks, cover down in here after hours when it starts to undercut these lows here, or meet up with them, and then you get a rally today and I come back and short it. So that's how I'll work a stock on the short side. And there have been several that have been very nice, over the most the most recent few days, I guess. So I'm having a good time. I don't know about you guys, but if anybody's sitting there long, I would have to categorize you as a moron, because the market's been telling you to get the hell out a long time ago. I mean, the last few names, and we pointed this out over the weekend in the VoSI focus list review that we sent out. When was that, Dr. Chan? Sunday?
That's right.
Yeah, and what do we say? I mean, okay, we've taken most everything off the list, but 3 weeks ago, we pointed out that you're starting to see waves of these stocks break down. That's telling you something about what's going on under the hood of the market. And that was 3 weeks ago. You can go back and look at that focus list review piece that we wrote, and what's happened since then? Well, we've had wave after wave of stock come off the list. And as we pointed out over this past weekend, whatever's holding up, you don't get all excited and think you're going to buy it because the market's going lower. So whatever's holding up, market goes lower, it's just going to be the next thing to go down. And that's what happened this week with names like Momo. Weibo we took off over the weekend, which I think was smart, because it's broken down further below its 50-day line. Now it's undercutting these lows. So, this doesn't look healthy. And I'm often amazed at how people can't really sense the tone of the market. They keep wanting to buy stocks. I got to buy something. It's pulling back. Everything's an undercut and rally because I just learned an undercut and rally, and it's some rule that I can use without thinking. Undercut and rally moves, remember, started out as points where I cover short positions on the way down. Then on the rally following the undercut, so you're seeing that, saying a Weibo here, I'll try to re-enter my short. I'm not necessarily using it as a buy point, but what I've noticed in this market, and again, certain things work during certain phases of this market and then they stop working. But if you have a stock that's had a nice move come out, undercut and rally here, that's actually a good spot to buy an IPO if the market's acting well, and it was back in August in terms of the IPOs as a group. So when it sets up in another base, this undercut and rally becomes more of a buyable phenomenon than just covering, short covering things. So when it breaks out, now you get the breakout failure. Now you've got some issues. Now the rallies become shortable, and now it's undercutting all the lows, and that's not helping to produce any sort of rally. So, the undercut and rally is not some magical new long setup. It is a setup that I observed that to work in this market earlier this year, mostly in the summertime. And before that, actually, extending back to springtime. So whether it continues to work, I don't know. But all I know is that it originated as a tool on the short side for covering shorts and then covering the shorts on the undercut and then looking to buy or short again, rather, on the ensuing rally. Okay? And that's all they are. So I can tell everybody's speechless this morning. There are absolutely no questions. One question. You guys got to have some questions. I know somebody out there once asked me whether you should buy Square. Good luck. They had a good earnings report. That's a big pocket pivot, but in a down market, this thing probably goes nowhere. But you can always, keep it as one of the few stocks on your buy watch list. But that's what it looks like on a weekly chart. So I don't know. If you're in love with it, go ahead and buy it and let us know how you do. But right now, I'm not really looking at the long side of this market, although we have to remain aware that we're down 1, 2, 3, 4, 5, 6, 7, 8 as of right now. What's that?
8 days,
yeah.
8th day, potentially.
So, either you're getting oversold and you're going to bounce, or this thing's setting up for a big break. So on the short side, I want to be running things fairly tight using my 620 charts, but also being ready to pounce when a setup is there, not being afraid to take a shot while keeping my risk relatively tight. So that's really the approach. And I'm not going to get into some idea that, oh, well, the NASDAQ's undercutting less, so now I'm going to cover all my shorts. No, if something rallies up into an area where I can short it, or I've already been campaigning something on the short side, and I have the potential to put the position out again, I'll do it. As long as I can identify a tight cover point and operate on that basis. So anyways. Somebody says, I'm having trouble identifying MACD stretches in real time. One thing I've noticed that when a stock is far away from the 6-period line is usually a good cover point. Well, I mean, a MACD stretch is a MACD stretch, and you also have to be able to use your judgment. If you can't use your judgment, then don't even bother. But for the most part, I'll show you an example. MACD stretch is when you're starting to get extended to the downside on the MACD stretch. So like on Tuesday, I saw the MACD stretching down. You've been down all day long. You get a big volume break here. I think is this Tuesday? I believe so, yes. So I'll cover. I'm sorry, here. This is where it was. Yeah, and the MACD stretching way down there, and you get a big volume break. So within that context, I can see that this thing is probably played out in the short term to the downside. Sure enough, it rallies and it bounces about 8, 9 points from there, and that allows me to put it out again the next day and catch the ride down lower. But that's basically what a MACD stretch looks like. There's even one right there in the after hours, if you believe in those sorts of things. But you also have to use your judgment. Where are you within the overall position of the stock's chart? Most people, I got to tell you that what I think the biggest weakness of most investors, and probably this means most of you aren't even fit to be investors, is they just can't use judgment. They need to have everything to be spelled out in black and white, like a stop sign. Green is go, or stoplight, green go, and red stop. But the market's much more complex than that. So you have to be understanding what's going on in the 620 chart relative to what you're seeing within the context of the daily chart or the weekly chart sometimes. But if we look at, say, Amazon, okay, at the time that it was, if we go back to, what day was that, Dr. K? That was this day, okay. at the time that it rallied up to its 50-day moving average, what did I notice here? There are a couple things. So this is coinciding with this day, 3 days ago, right where it hits the 50-day line. So what do you have? You have the MACD stretching to the upside. Stock's right against the 50-day on the daily chart. So what do I know? If I see a MACD stretch and then I see it cross and the stock is right at the 50-day, well, I've got a simple reference point for a quick stop at the 50-day. So I take a position right there on the MACD stretch because it's occurring at the same time that I'm seeing the stock rallying into the 50-day line. And that works. Boom. Then you get a confirmed 620 sell signal on the double cross because you've had the MACD cross, and now you have the cross on the moving averages. So there they are, and that's so there you go. And the whole way down, you have no, you do not see a buy signal the whole way down until you get to this sort of climactic sell-off here. And to me, that's, I'll look for that. If you've been down for a while and then you see a big volume spike and everything is getting sold off hard, so it's a little bit of a change there. A lot of people get excited about that and they want to start shorting. I'll cover that. So especially if I see a MACD cross, and I'm ready to go back and short it again. But that's, you know, that's basically how you use a MACD stretch on either side. So yeah, there's no like handbook for it. You got to develop some judgment and some ability to understand the context of what's happening on the daily chart and the weekly charts in conjunction with what you're seeing on the 620 chart in real time. So let's see. Cavum looked like a stretch to me early yesterday morning. Cavum. Okay, what do we got here? Well, you had it early in the day, yeah, right at the opening, and then it reversed, so you could have hit it somewhere in here. It's kind of far down, though, once you get the cross, but I think you're better off trying to hit it in here or just at the open hit it. What did it look? See, because what you're doing is you get a marginal breakout. You see that? And what happens to breakouts in this market? They lead to huge gains, right? No. That's what I would tell you if I was trying to sell you newspapers, but no, they fail in this market. And you get 1, 2, 3 attempts at making new highs there, and the third one fails, bombs away. So within that context, you'd be looking for a failed breakout. So if you saw it open up here in the morning, okay, and it drops below, say, the 58 level, now you have a reasonable idea that this breakout is going to fail. So you could short it on that basis, seeing what you see on the daily chart, and so you would hit it at 58. That would have got you in up here. Okay, right, pretty much right at the open. And you could have used, once you knew there was a high of like 59.07, you could have used that as a quick stop, 2% higher, less than that. And then once you get the cross here, now you can go medieval on it and maybe add a third or double your position, whatever, you know. So that's really how that works. But all I know is the 620 chart is a good tool. It works now. I don't know if I'll have to change it at some point. Markets will change. Look at how you're getting a rally back into the 20-period line. Maybe that's a short. The market's just bouncing all over the place. You have the jobs number out tomorrow. You had the Fed yesterday. But does any of it really matter? I don't know. Do you think it really matters what the jobs number is tomorrow, Dr. K? Is that going to be a market mover?
Just my answer is the same as last time. It really matters not. I think more importantly, like I wrote, you know, about the market direction model, it's been on that sell signal, and the question is, you know, markets are forward-looking, and they are going to anticipate a rate hike in December based on very high odds. So that could induce a continuation of this correction. In other words, you know, in the past we're conditioned to think, okay, the market's pulled back to this particular level, it's off 3 or 4%, it should find a floor. But the difference this time is that we are right up against the next Fed meeting, and I wouldn't be surprised to see some sort of continuation of this downtrend. Yeah, I mean, nothing goes straight down in a line, but overall, everything's pointing to further correction, and that's on the basis of how beat up the leading stocks have gotten.
Yeah.
And you know, the focus list is a great barometer, as should your personal portfolio, in terms of how many stocks you've got on the long side. You know, and like I said, we're down to 7 names on the focus list. That's a far cry from how many we had before. But you know, as each one of these hits their, you know, breaks through their areas of support, they come off the list. And obviously, for someone who's trading their portfolio, they should be quicker about it. In the sense that your stops, you want to be keeping them quite tight, and also maybe you want to already take partial profits into strength. And so yeah, I think we're at an interesting juncture here, because also the elections are on the way on for Tuesday, and what makes this election different from the others is that it seems the candidates are pretty extremely polarized, more so than normal. You got a lot of these news items out there saying, vote for Hillary is a vote for World War III. She pokes the Putin bear, and then you've got Trump, who is perceived to be, obviously he's a very accomplished businessman, and the notion is that he would be good for the U.S. economy. But you got a lot of wild cards out there, and these news headline items, like when the FBI came out with the news that they're going to look further into Hillary's emails, it did affect the markets. So I think we could get some more headline news like that could create additional volatility ahead of November 8th.
Yeah, so I mean, I think anything can happen. So I think you just focus on the setups that you see in real time. And if you were watching the setups, you got short some things. Even Tesla was so ripe on Monday. We put out an alert on that on Monday. I'm sorry, on Sunday rather. And it opened up Monday right around the 20-day line and gapped down through it, or actually gapped down and then pushed below it, and then just kept going lower from there. So now it's undercut these lows, and I think that could create a short-term rally from here. I don't know, but I think eventually you're heading for this low. So I would use, if I was taking a long-term view, hopefully shorted it as close to the 20-day line as possible, use that as a trailing stop, or the 50-day line. And really, that's only about 5-6% away. It's not that far away, I believe. Is that right? Am I right there? Yeah. 10 points would be about, yeah. So it's not
5%.
Yeah, so it's pretty minimal. But I think longer term it's going to go lower. I think the whole company from a financial standpoint is kind of a joke. And I finally figure out why Tesla is so desperate to buy Solar City. They need their cash. And Elon Musk was babbling about how they're going to get $1 billion in cash next year from Solar City's operations. The Solar City's losing money and it's a high debt operation, but they can suck their blood and take their cash, I guess. That's what it looks like to me. I mean, if anyone's an accountant who's looked into the numbers more deeply, we'd love to hear from you. In any case, that's what it looks like to me. And I think Tesla's, they're a car company. Yeah, they make good cars. They're going to sell some cars, but should they be valued like a high-tech company, or should they be valued somewhere closer to what a 6-7 times what your standard auto company trades for? So even if it went to 60 times, okay, what's the current trailing or forward P on that, Dr. K? Isn't it some ludicrous number?
Yeah, let me just check. Well, hold on a second.
I'm holding.
Yeah, no, right now, it's like 7.
7 what?
The Ford,
Tesla. Okay, so Ford's 7. What's Tesla?
Well, Tesla is a bit ludicrous because it's
infinite.
Negative earnings. So yeah.
Yeah. So if it's sold at 60 times, what's the forward numbers on that? Aren't they supposed to make $10 like in 2018? So at 7 times, then you'd be at $70, and at 30 times you'd be at what? Then you'd get to 210 maybe. So at best it's
I think it's a play on hope, really. That this technology it's the first company to do so, and the big question is, are they going to be an Amazon that had negative earnings for years, and yet the stock kept moving higher because the market's smarter than the individual, and the market will tell you, yeah, Amazon deserved those ridiculously high prices going into the March 2000 market top,
Right.
even though it still wasn't going to earn money until, what, 2002 or 2003.
Right.
So that's the thing. It's markets are very smart. They're never wrong, as the saying goes. And with Tesla, I think that the problem here is while Tesla has first mover advantage, the barrier to entry for its competition is very low. And you already have these other companies, juggernauts, that are getting on board this technology. Whereas on the other hand, Amazon had the lion's share of the market, and in the internet space, what makes a difference is the aggregate network effect of a company. So in other words, something like Facebook, for it to be effective, you need a lot of people on there, and it's got the lion's share. That's why it continues to dominate. And Amazon, the same thing. It had the lion's share, always had the lion's share of vendors, and a very dynamic system. And of course, Bezos is very shrewd about customer service and giving the customer what they want. So they've made all the right moves, and they've been able to maintain their pole position lead. But Tesla, unfortunately, while it's commendable that they've got the first mover advantage here, unfortunately, there is no such thing as network effect when it comes to the sale of physical objects like automobiles. And you are going to get GM, Ford, all these other car companies are going to come and squeeze their profit margins.
Yeah, so I think it's got to go lower one way or another. I mean, at least to 100, something like that. Just watching.
But there is some technology. I know that Tesla's got supposedly some killer app technology in the area of battery life, that sort of thing. But again, there's no evidence. It's just talk at this stage. And Elon is a brilliant guy on so many levels, including being a great sales guy. And I do think, though, that it's a lot of sales talk. To talk the markets up, talk his stock up, even though this killer app might not actually launch for a number of years.
Yeah.
So in the meantime, the stock's going to get head lower.
That's what it seems to be indicating. In the meantime, all we do is go with the price volume action, and that told you to short it around earnings. So I think around $200. In fact, it opened up Monday around 202, I think it was, 201, 202, which gave you a perfect short selling opportunity. I'm just watching some of these names on the 620. You can see Amazon now flirting with the 20-period line. I can make that bigger so everybody can see it. Qualcomm, let's see. I'm still short that one. It's moving lower. It's just continuing lower on a 620 sell earlier, and it just continued lower. Take two I'm watching. It's hovering around the 20-period line. The 6-period line looks like it might want to cross. We'll see what happens. I've got a little bit out short up here, so I'm making 20 cents or 30 cents, somewhere around there. Electronic Arts is another one, and you can see it's kind of drifting up. It looks like it's getting ready to flip over. We'll see. Salesforce, I'm watching this one. It's already had a sell signal, and it looks like it's rolling over. Facebook was a sell signal earlier. Now you've had a buy signal, okay? But now this may roll over. So now if you break below, now you may have a short here, short sale signal here using, say, 121.50 as a stop. But watch how this plays out. So Dow's up 19. You can see it's starting to come in. Can you please comment about CMG? You have a very short, so I don't know why am I supposed to comment on it? Where did you put the position at? What's your price objective? What you had is a gap down, and now you're just flirting around in a bear flag. So if you can't understand that, then my suggestion is you probably shouldn't be trading. That's really all you have. You see there's a gap down move, and now it's in a bear flag. So, chart analysis 101. So anyways, I don't know where you took your short, but probably would have been better up near the 200-day line. So hopefully you took it up higher, in which case I salute you on that. But I mean, you want us to comment on this? What are we supposed to say other than what we can see on the chart, which is fairly obvious? You're in a bear flag. Anyways, what else we got, Dr. K? Anything exciting? Any names you're looking at? Any beautiful shorts? I'm going to watch ATVI after the close and see what this does. I think it may drag down the other gamers. We'll see. EA flipped out on its gap up after earnings, and so it's still in trouble. And we have Take-Two is still up there. on what's trying to become a viable gap up. So, we'll see what happens. I'm actually looking for this to flip out here some point during the day. I'll probably run it up to 49, stop me out, and then roll it over. That would make sense. Anyways.
Yeah, I think what'll in the days ahead, like I said, markets, we all know markets don't go down in a straight line. And this may very well be the eighth down day in a row. So we'll get some kind of reaction rally, and I think that's going to trigger a number of potential short candidates.
I don't know. The closest thing I ever saw to a market going straight down was, I guess, was this January of this year, and then of course the breakdown in August of last year. So those are pretty straight lines. They don't last forever, but man, they can get nasty before they get better. So. Anyway.
Yeah, well, what I mean is, yeah, you know what I mean. I mean, like the one in August was basically, that's 3 giant days down, and that was a highly unusual situation. That was a highly manipulated, strange situation, which caused them to to launch legislation about shorting. So that was a very that's pretty much unprecedented, that kind of market action. And we know that there's manipulation going on. As far as January. We did have a like a little bit of a reaction bounce. I mean, that's pretty volatile, but like the Nasdaq, it hit a low at 45.73 and then bounced up to 47.14. And then so there might have been maybe a couple shorts that came up to logical areas of resistance, and so forth. And then of course it fell out a bit again, and then you did get a nice little rally from January 20th, well, the next 2 days, and then the following week. Nice little bounce there, and then market rolls over again. And both of these were actually catalyzed by the problems in China, the economic problems over there.
Right. The meltdown there.
So, this of course could happen again because, as we all know, the global economy is quite unwell. So we'll just have to wait and see.
Let's look at some other names. Netflix has broken the 10-day line. Don't be surprised if this thing doesn't end up topping here. That could happen. I mean, I think for the most part they're going on the hope that someone's going to buy them out, I think, and that doesn't necessarily work out favorably for most companies, including Apple. So I've read a lot of different analyses of all this, so none of it really matters as much as watching the price volume action. So if you got a failure, I think you could easily test the 20-day from here, which is at 117.96. But you got a failure through the 20-day. Now you got to start thinking about the potential for this to become a late-stage failed base. So that's a possibility. GLD, we already talked about that earlier. So it's moved up off the lows. It's at the 50-day line. So this is all event-driven as far as I'm concerned. You have the Fed, are they going to raise rates or are they not going to raise rates? If they raise it once, what does that mean? Is that it, one and done, and then everything can continue along on its merry way, or does it mean they're starting a new cycle? So, to try and come up with some buy strategy in the metals based on the technicals, to me is kind of a futile sort of thing. So, yeah, Amazon coming in just a little bit here. So, I'm not a buyer. I own physical metals, but I'm not a buyer here. And you silver too, and you're coming up to the underside of this base. So, it's kind of like flip a coin. Let's see. Keep an eye on a line today. Well, a couple of weeks ago, we picked that one off pretty good, didn't we? Right at the 20-day line as a late-stage failed base. Now you're rallying back, probably towards the 20-day at 87.95. So that's what you want to look for. Let's see. Yeah, market's just fluttering around. So I'm not really making any progress in terms of huge profits. It might be up a little bit or down a tiny bit, but nothing really exciting happening yet. Maybe it'll happen at the end of the day. That's what's been happening over the last few days. Some of the better moves occur towards either the very beginning of the day or towards the end of the day. Anyways, that's all I've got. All you're doing is running through your old buy list and looking for stocks that are failing, and coming after them on the short side. and I think that would have worked so far this week. And there's more. You know, Priceline is another one. Broke the 50-day line. That's another big stock NASDAQ name, and it rallied above it. It could have been shorted. Now it's rolling back below it. So how much you make, though, is going to depend on where we go from here. And like we were saying, you are in a position where you could get a reaction rally. So if you're putting out short positions like I am, you want to keep things relatively tight. So that's because you don't know if we're going to go, if we're just going to flutter around here today and then head lower tomorrow. So you want to be, I think you want to stay flexible, and you want to stay alert, and you want to be watching for potential breakdown. So even like, look at something like this, Yelp. That was a nice short yesterday at the 50-day line. Now it's trying to rally. It's maybe near, it's under the, it's the underside of this base here, and also where it opened and closed yesterday. So that might be an area of resistance on in the short term. So let's take a look at the 620 chart. It's pushing, so it's up there, and just keep an eye on that. But basically, that's all I'm doing. I'm testing out some relatively small short positions, and seeing what happens if the market gives way. Otherwise, I'm just going to keep things pretty tight and bail out if I get stopped on, you know, less than 1% stops. For the most part, I think is how I've got things set up right now. Anyways, any other questions before we wrap it up? Okay, well, that's all we've got then. I want to get back to my trading because I don't know, maybe some things are moving into some juicier spots. So anyways, any last questions? Nope. Okay. Well, thanks for showing up, you guys. Have a great weekend, and good luck trading. We'll see what happens tomorrow after the jobs number. But again, like I said, focus on stocks that were on your buy watch list over the last several months, okay? In fact, the leading stocks. And then as they break down through areas of potential support and then either pop back up, you know, like the EA or the Amazon or whatever, then look to short them. Or if you can hit them just as they're starting to break, then that's another option as well. So if you're a short seller, otherwise I think if you're just a long only type of person, then I think you definitely should be in cash. Right, Dr. K, would you agree?
By this point, yeah.
Yeah.
Unless you have that one rare stock that's bucked the trend and it's not showing you,
Right.
you know, it's actually bucking this downtrend. Well, that's cool. You know, you can sit on your position. Like I said, like in the 90s, you know, with this ebb and flow to the markets,
Yeah.
I might have 14 names and they get shrunk down to about 2 and then 1 and then 0.
Yeah.
Typically. Almost no survivors in a downtrend.
Yeah, so that's, you know, you should be in cash already. You should have been in cash a while ago. And if you do what I do, which is sell into extended upside strength, you would definitely be in cash. So anyways, thanks for showing up, you guys. Have a great weekend. We'll catch you next week.
So long, everyone.